Good afternoon. George Cavaligos for HFT bonds. One-way train today. I'm not sure why all of a sudden, people latched on the idea that the fiscal cliff was coming again. Nobody really showed any kind of compromise so far on either side. Nobody's shown any desire to try and do the right thing and do some type of bipartisan compromise. This whole country was founded on that idea that nobody gets everything, and this whole idea that by caving in one way or the other, either one party or the other party is going to lose something. Well, we've already all lost something, unfortunately. So back to the markets here. Treasury's been, straight up out of the gate. I, came in this morning and the market, I think, was under a little bit of pressure. We'd been down overnight. Equities were up. The idea being that we had two more POMO buybacks, a 10-year today, and I think bonds tomorrow, the last of the Operation Twist trades. We would rally into that in a very thin market. The 4.25 to 5.25 billion of 10-year, I think they were buying 10-year notes today, would have been a very hefty purchase. And tried to pull the trigger and put on some trades this morning, but my head is so clouded up right now that I can't see straight. I'm deciding, I knew something was going wrong on Friday. I didn't realize it was the flu coming on. This thing's been beating the heck out of me for the last 5 days, and it's still, weighing on me here a little bit. Obviously, my mind isn't very focused. Not breathing properly. I'm certainly not getting any exercise, and I'm really struggling with this thing here, and I'm sort of watching from afar with the markets, unfortunately, and hopefully as I start to feel better I can dive right back in on this thing. Tomorrow's Friday. There's probably a ton more of political risk. The House isn't even in Washington. These guys are sniping at each other back and forth, through the media and press conferences and whatever other Twitter. The headlines this afternoon in Twitter are just ridiculous. Back and forth, back and forth. Your fault, not my fault. It's your fault, their fault. It's all your faults. You guys are supposed to fix this stuff instead of you keep kicking the can down the road. And the markets are protesting. The equity markets are down pretty hard. I think pretty much everything I see on my screen is down pretty hard except for treasuries and, oddly enough, gold and silver. The correlations have flip-flopped here. Go figure. But the dollar's up after being down pretty hard this morning. It's reversed a bit here, and I think we're going to see some continued risk-off trades tomorrow and probably into Monday. I don't expect much to be going on. The volumes did pick up on the rally in the treasuries today, but they're still below par. I did point out to the people in the chat room the big shift in the commitment of traders data. Everybody's out. All the dealer shorts have been paired almost to zero, and a large percentage, if not all, of the large hedge fund longs have been chopped out just in time for the market to rally. Isn't that amazing? The other factor, we have to figure out what is going to be happening with QE forever next week. I think we're supposed to get a schedule from the Fed. At least the website says on December 31st we're supposed to get a schedule of their planned purchases for the Treasury market. Hopefully that isn't just some kind of automatic thing related to Operation Twist. I think it's pointing towards QE forever starting next month, and we'll be able to trade it like we have been with Operation Twist. They're going to tell us what they're buying, when they're buying it. Fingers crossed. Allows us to front run them like they're letting the dealers do. The dealers are just front running the Fed. That's the whole idea here. Alright guys, in the chat room I posted a couple levels. I would look for any kind of pullback tonight, maybe tomorrow morning. 132.24 strikes me as a nice spot to take a look at on the 10-year. 148.27, 148.23 on the bonds. And then look for, stops below the old highs. 133, 132.20 plus in the 10-year. And you probably will see a little bit of overlaps. Don't put it just below the old highs. Put it a little bit further down. And what was the old high in the bonds? 147.19? 18? I can't remember off the top of my head. Look for the same high that correlates with 132.20 plus in the, I think it was last Thursday. No, what's today? Today's Thursday. That would have been Monday's or Tuesday. Monday's high that we saw early in the day. Was it Monday or Friday? Wow, guys, I turned my charts off. These new cameras, this new high-def camera, I have to turn every program off on my computer. And I wrote these levels down. I want to buy against the old highs in the bonds and notes. As we rallied today, we left some striking low volume prints at 133. 24, 133.27, and as you're going lower, 133.20 plus. So we left some very low volume prints. Sometimes the market will back and fill in that area, and it'll give us a chance to put some longs on down there. Another buyback tomorrow, and then the weekend, and you know, the guys in Washington playing their silly games again. Okay, that's about it. Sorry, I'm not on top of the game here. I definitely want to get some rest and get ready for what promises to be an exciting new year. Have a great night.